Vitale, Vitale Wealth Management with this week's grading investment market update. All information is gathered as of April 21st, 2025. Let's talk about what's happening. First, happy Easter. Hope you all had a great Easter with your family and enjoyed some time with your loved ones. So we're in the Easter season now. Let's get into what's happening. It was a shortened trading week with the markets closed on Good Friday in observance of Good Friday, despite a long performance in the prior weeks. A strong performance in major U.S. indices lost ground. So last week, S&P 500 was down 1.5%, NASDAQ 2.6%, Dow Jones 2.66%. International markets, however, told a different story once again. The developed markets added 4.34%, and emerging markets rose 2.3% for the week. A standout performer was the small cap segment, with the Russell 2000 gaining 1.1%, outpacing large cap stocks for the week. However, small caps continue to trail their large counterparts year to date, down 15.4% compared to the S&P decline of 9.9%. Now, retail sales data came in better than expected last week, rising 1.4% in March, marking the largest increase in over 2 years. The increase suggests that consumers may be pulling forward purchases in anticipation of higher prices due to expected tariffs. Notably, sales in auto and building supplies saw significant gains, further supporting the idea of front-running tariff impacts. We're going to see how that shakes out. Hopefully we're going to get some deals soon, but as we talked about, we're having volatility that's going to continue until this all gets shaken out. The upcoming economic releases, we're going to have key releases offer fresh insights into the housing market and consumer sentiments. On Wednesday, new home sales data will be released, shedding more light on the state of the housing market, which is soft this year. Then on Friday, the Consumer Sentiment Report will provide a snapshot of how consumers are feeling about the economy. Now today we're starting to see, on Tuesday, we're starting to see market is up today. So a nice rebound. We're actually looking for some earnings reports from some of the Mag 7. So we're going to see how that's going to work out. The market outlook, so far 44 companies have reported earnings with the word tariffs mentioned 239 times, a signal that trade policy remains top of mind. A lot of companies are not going forward with guidance until they know what's happening with that. Many companies are holding off on providing full year's guidance until there's more policy clarity. Given the current uncertainty, forecasting outcomes has become increasingly difficult. A company's ability to navigate this environment will largely depend on factors such as resilience of its supply chains, pricing power, and overall balance sheet strength. A lot of companies are saying, we don't know if we're going to make 7% or 13%. They know there's going to be profit, but they're not going to forecast until they know how the tariffs will affect them. The uncertain times is especially important for investors to stay grounded in core principles, focus on quality, maintain diversification, and keep a long-term perspective. Stay the course. We talk about that all the time. This week, earnings season heats up with notable reportings from the Mag 7 we talked about. Tesla, Alphabet, Google, they're going to be coming forth today, Tesla reports. So we're looking forward to seeing what that's going to be. Remember, Tesla's, even though the car sales are down, there's so much more to Tesla. So that's what's keep driving that stock. As far as the gradient portfolios, there was no real changes in the portfolios last week. Every once in a while, we have to rebalance quarterly at a minimum, but if we needed to shake things up, they will do so. Let's talk about the market outlook. Netflix, which is owned in the G33 and Core Select, reported earnings beat last Thursday, maintained its 2025 guidance. Management indicated it does not expect consumers to cancel subscriptions, even if tariffs begin to weigh the broader economy. The stock was up 4.48% for the week. Unfortunately, United Healthcare, which is owned in the G50, Contrarian, and Core Select, saw its share down 22.6% last week after reporting a rare earnings miss and lowered its full-year outlook. Reasons for the earnings miss were higher than expected utilization rates of physicians and outpatient services. It's marked the stock's largest drop since 1998. 1998, and that was quite a big drop for that, which has been a very good stock for the last few years. So that concludes this week's market commentary. Thank you so much for being part of our family. If you'd like to get a hold of us, you know the number 855-756-5700. Visit us at vitalewealth.com. Make sure you know what's going on. We've got a lot of good events coming up. We've got some Top Golf coming up. We've got some theater tickets for the symphony in Saginaw. So make sure you reach out. I know Casey's trying to get a hold of everybody who can make it. There are also some opportunities. We keep trying to reach out. So we're here for you. Remember, stay the course. We'll get through this. 3/4 of the time, market's better than it's not. So we have safe money for those times. But that's it for this week. God bless you. We'll see you again next week.